question, I bought the open for a swing up, sold the 4 high for a swing down, and then bought above 6 for a swing up. Okay, after which I was too upset to continue. Can you comment on these trades? Okay, so we bought the open, a breakout above yesterday's high for a swing up. My first thought is on the open. A lot of times, usually it's better to get information, and buying bar 1 is not enough information for me to buy. As soon as I see the close of 1, if I did buy the open of 1, I'm going to get out below 1. And then he sold the 4 high for a swing down. I don't know if you were in the room at the time. I was talking about 4 being a buy setup or a opening reversal, and I talked about all of the opening reversals that we've had over the past month. That so many days we've had strong sell-offs, and then a quick early low of the day despite a strong sell-off. So I personally would have not bought the open of the day. This is a weak rally, and there's just no way that I'm going to be buying high after a weak rally at resistance to the all-time high. So there's zero chance I would take that buy. So I think that's not a good buy. Obviously the market's up there, so traders bought. For every seller there has to be a buyer, but not an individual trader, an institution maybe. Trade selection, I would not have taken that buy. This is a buy setup more than a sell setup. And then bought above bar 6 for a swing up. I think it's okay to buy the 6 close. I think it's okay to buy above 6. But if you do, you've got to be aware that you're buying right at resistance, the 3 high and the high of the day and yesterday's high. So you've got to be pretty quick to get out. So if you buy the 6 high, where do you get out? Do you get out below 6? Maybe. Do you get out on a second pullback bar? Bar 8 falling below 7. More and more bulls were exiting through here. That's why we're getting this series of bear bars. And ultimately, the final bulls gave up on bar 11. Depends what your objective is. If you're trading for a swing, you have to use swing stops. The swing stop for the bulls buying the 1 open, the swing stop is below 1. The swing stop for the bears selling the 4 high is still above 1. Selling that 4 high, my stop is up here. And for the bulls buying above 7, you're buying at the top of a developing range. I talked a few times early on. If you read my post at the beginning of the day, I said it looked like a trading range open. So if you're buying above 6, you're buying at the top of a trading range. And in general, that's a bad thing to do. I think trade selection is the issue. It sounds like you were very eager to trade and very eager to trade breakouts in a market where the market's been sideways for 10 days. If the market's sideways for 10 days, in general, you want to buy low and sell high, not buy high and hope that this is going to be the start of a breakout. So you bought the 1 open and you bought the 6 high. Both times you were betting on a breakout and the rally is just not all that strong, and we're at the top of a 10-day trading range. By definition, you're taking a low probability bet. And if you're taking a low probability bet, you're betting on a swing. If it's going to be a swing, it will become clear. I think it's not yet clear on the open of 1. It's not yet clear on the close of 6, although the close of 6 is hopeful for the bulls. You're taking swing trades that are just not high probability. And if you take them for the next 100 trades, I think you may end up making money. However, you're going to be losing 60% or more of the time, maybe 70% of the time. And it's just not fun to lose that much. Like you said in your question, I was too upset to continue, right? So if you're taking low probability trades, you're going to be too upset to continue, like you said in your question. And the problem is, the only way you can make money taking low probability trades is by continuing to take them, and you get occasional winners that more than offset all of the losses. However, really difficult to do because, like you use the word upset, that is the problem. You're a person and I'm a person, and if we're upset, we cannot do what we need to do. And if you're losing too much of the time, it's really hard to manage the occasional big winner well enough to make up for all of the losses. So for me, my comment is trade selection. I would be much more patient and wait for more information and wait until it's clearly bullish or bearish. You know, the 11 close, probably bearish. 13 close, high probability we're going down for some kind of a measured move. So wait for that, and it's much easier to make money. We should talk about the 2 or 3 best swing trades of the day. Maybe selling the 10 close, stop above here, and then getting out above 22. Selling the 13 close, stop either above 13 or above 11 or above here. I think you still get out above 22. And then buying above 22, that's not a swing. Buying above 36, theoretically it's a swing because it makes sense that the bulls had a chance of converting a spike in channel into a trading range. And I'm not sure the probability is high enough for a scalp. And then finally, buying above 56 or buying the 58 close, 59 low or the 61 high. And you end up getting out below 73, making about a point. So some days you get really big swing trades. Other days are days where you're going to get a lot of reversals and not much follow through. Hope everybody has a good night.